Good morning. Ira Epstein of Linn Associates with your morning flash update, and this is for Monday, the 10th of February, 2020. Well, there's not a lot of economic news. We saw China's CPI come out. I've already written about that for my subscribers. Suffice to say, their food costs for the year went up 20.6%, ex-food up 1.6%. So need I tell you, the African swine flu was the culprit there. Now, this week we're going to get Fed Chair Powell going to Congress and speaking before the committees there. We'll be looking to see what he says about the virus, what they ask him about the budget, the deficits that we're running. It'll be an interesting 2 days of wrap up there. So that'll start tomorrow through Wednesday. You know, we have the New Hampshire primaries going on, so we'll hear about that in the press. But the real event, and I'm so tired of writing about it because I'm not a doctor, is the coronavirus. And you have to start asking yourself, has this peaked? Where are we on this? Are we close to a peak? It appears that in Wuhan, that is in fact the case, that yes, we keep getting cases, but it's not like they're going up by a dramatic amount. In other words, if you get 2,000 a day, they're staying at 2,000 a day. It's a question of testing equipment and the like. I think the stock market is up because many factories have employees coming back to work. I am not saying they're all doing what you think they're doing. Foxconn, GM, there's a number of them that have gotten back into different cities and they're making face masks. They're doing other things because you have to have a certain amount of face masks to get all the companies going. Then you've got the problem of people coming back that are in quarantined areas that can't make it back to work. You got people scared to come back to work. So the workforce, I've read reports about 10%, 15% of the people that can go to work in some of the areas ours, quarantine cities, we have to wait for them to open up the work there. The point that I'm making is that we're starting to see that there's the attempt to reopen the factories, and I think that's what you're getting your rally on here. The dollar's stable against most currencies today. In the grain markets, I think those markets are waiting to hear when is China want the imports again from us. Same thing in the energy sector as you look at it. The question isn't, does China want the oil? We know they're going to need the oil when the factories reopen. But under their contracts, they're probably pressuring OPEC and other countries saying we don't need it right now. We might have to forestall some of these amounts for another 30, 60, 90 days, but we will live up to our contracts. You've got to deal with this through the whole market. I doubt seriously the U.S. is going to hold China to anything until we feel, along with probably them, that the worst of the situation is behind everything. So I think that's where you're at. You got to trade it accordingly. And when you trade markets like this, sometimes you go to day trades instead of position trades. And one of the ways that I know that I've taught over the years, and I know a lot of pros that look at them, there are services that do this, are called pivot points. And what you're looking for is if a market extends itself down or up, is it getting overdone, overbought for an in and out trade? And what pivot points do is, I've created, by the way, a 3-part series to teach you the formula of pivot points. Then I'm teaching you how to apply them on your charts. Then what I'm doing is showing you how to use timing with them. In other words, slow stochastics. If you'd like to look at it, good time to do so. Go to our website, sign up for our free offer on pivot points. We'll send you the links to it, and away you go. I'm Ira. Thanks for listening, and I'll see you this afternoon.